Hello everyone, welcome to our monthly webinar with Trive Financial Services. I'm joined here by Odwa and Shaun, who's a senior sales trader here at Trive, and I am Shaun and I am one of the other senior sales traders here at Trive. The main thing that we'll be speaking about today, Odwa, is we're going to zone into the US and zone into the European zone, if I'm not mistaken. All right, so I just want to start off with the US. There has been a lot of news coming out. So I'll start with last week we had the Fed release their minutes. And it turns out, as much as we're seeing a slowdown in inflation in the United States, the Fed is still on the fence with regards to cutting interest rates. Because they believe that they don't want to rush that whole thing, because obviously to reverse what they've achieved so far. But what is interesting to me with regards to this is that I do think that the economy in the US has been quite robust. I do think that the inflation rate, they have fought it quite well with the interest rates. And in your opinion, I just want to find out. Do you think that we're potentially seeing some interest rate cuts this year, or the Fed is basically keeping their cards close to their chest but not to shake the markets?
I think that right now it is safer to keep things as they are and not to actually give too much statements towards cutting any rates. The consensus right now, we are looking at one cut in September, given also. Even though the inflation numbers has dropped, it's still way well above 3% and starting to go below that. So it does seem right now that it is seemingly that there is not going to be any cuts on the cards. In my personal opinion, I don't believe that a cut will be coming anytime soon, based on just the fact that inflation is still quite sticky and the job market remains robust if we also look at what happened with the job numbers on Friday.
100%. I'll slightly differ with you. I get where you're coming from. I also sometimes think that, interest rates and inflation targeting sometimes comes to the detriment of the consumer, as much as, it does boost the economy from a policy perspective. But just leading into what you're saying, I think NFP numbers did come on Friday, which were slightly higher than what they anticipated, however, lower than the last month, showing that, all this policy is starting to push into the economy. We are also seeing that unemployment ticked up by 0.1%. So we're sitting there at 4.1%. From a United States perspective, that's technically a good thing, so that the economy is starting to soften a bit. But, and what I actually realized was that post that we saw the S&P 500 and the NASDAQ reach new record highs. I mean, we've been in a record high environment for a while, whether that be the JSE or the FTSE or, the major American indices. But looking from that perspective, I think that, the market is reacting to the data, post the FOMC meetings. And maybe we are starting to see the pricing in of potential interest rates cuts because of, the softening of that job market. But it is obviously interesting for me in that the FOMC meeting and Jerome Powell have a stance, but I also tend to see that the market itself, and from a data perspective, has almost like an opposite stance. So it is quite an interesting place to be, in, because there is, in my opinion, everything is not aligned that much. But it'll be interesting to see whether we do get one cut or zero cuts or even two cuts. I think the range out there is from between 0 and 2.
100%. I mean, and as you said, there has been a bit of tug of war in terms of what the markets and the Fed are looking at in terms of what the rate cuts are going to be. I mean, if you start the year off, you had a potential for about 3 or 4 rate cuts this year, and obviously as the data has been coming out, it has been quite different. On the opposite end, we had our first rate cuts in the ECB last month, and we also, I mean, as you said, a lot of record highs. We had the CAC and the DAX just a month or two ago reaching these all-time highs as well. Obviously now with political situations happening, for example, this weekend we had the finalization on Friday of the UK election, and with that we saw now a landslide victory for the Labour Party, coming in securing 410 seats out of a total of 650. And I think with that in particular, not to steal you away from you, but with that in particular, we're now seeing, firstly with the ECB cut, the European market has been doing quite well. Inflation numbers are actually favoring them. If you remember in 2021, the European zone had the highest inflation number out of the G10, and now we're seeing that now coming into play, where the inflation rate is now at 2.9, I believe, the core inflation rate, and 2.5 the normal inflation. So we are seeing some changes right there happening. Now with this political happenings over the weekend, firstly we had fears of the right wing in France coming into play, and France had quite a eventful, I would say, past few months. We firstly had some striking happening, and then we saw the far right winning the the EU Parliament numbers, and so now the snap election that occurred, we saw this weekend or yesterday rather that the right actually came in, far right party came in third place, and we're seeing now a possible coalition in the French government. Now, if you look at the indices that side, we're seeing now at least a strengthening currently in the index numbers is coming up higher. So that's quite interesting for me. And if we go just to focus on the UK right now, what we are also seeing is that with what's happening is that 14 years of Conservative Party, quite chaotic. We had Brexit under that rule, and we had 5 prime ministers in a space of 5 years. 3 prime ministers in the space of 5 years, and 5 in the space of 14. So there has been quite a major shift in that front in terms of leadership. And right now we have this new prime minister being sworn in, and his major selling point is that he's quote unquote the boring candidate. Not much news from him. He's not looking to change things up too much. What they are looking to do is, stately fix everything. So we have in the UK they have the NHS still suffering quite a bit. On the financial market, we've seen also they have gilts which would tank terribly when Liz Truss was prime minister. So it's just a matter of how do they go forward from here? Which policies are they going to bring into play? They haven't really put much of a stance in terms of how they're going to go in that front. So that's going to be interesting to look at. But if we're looking at the currencies right now, we have the cable rate currently at around $1.28, $1.28 against the dollar. In 2021 it was around $1.40. So there is a potential upside to that. Consistently in the past 7 trading days, it's been on the up. So this does look like there is a change, at least on the forex currency point of view, that it's going on the upside, and that's what I'm interested to see with these policies that they do introduce. Does it continue on that upside?
Interesting that you mentioned cable, because if we extend it into Europe, We're also looking at the Euro USD. That has also been on the upside for 7 days straight. So I think it's trading around 1.84 now as the time of this recording. And what's very interesting, it's almost like we're seeing, as much as there's been political uncertainty and the elections in the UK, we are kind of seeing, in my opinion, like the economies, European and England specifically, starting to stabilize, starting to go back to where, the historical highs, let's call them that, because, these are nations that were straight into recession. It was the end of last year, in comparison to the United States, where going back to what we mentioned, the FOMC versus market data, there's still a lot of uncertainty there in terms of what is going to happen in the future. So it is an interesting time to watch in the markets. And I think, the two markets that we are speaking to also are very important for what happens here on the JSE and the local economy, because we've also done we also finished our elections, we've got a new government, we've got a new cabinet, which seems to be pro-economy, for the lack of a better term, right? Let's see how everything intertwines between, the major nations and how it sifts down to South Africa.
100%. And you did touch a bit on recession, that the UK actually did dip into it. And that's why this week is now important when you're looking at the UK. They did come out of a recession in the last GDP print. And now on Thursday, we're waiting for that GDP print. Still looking at a very soft number expected, around 0.7% is the growth that's expected that side. So it's going to be interesting to see if obviously the new government cabinet coming in that region won't really affect this print, but seeing it going forward will be quite interesting. And that's why this print on Thursday is going to be quite interesting on that front. Now, with all this being said, stay tuned, open an account with Trive South Africa, and participate in the markets.